Well, Gautam Duggad is Head of Research, Institutional Equities at Motilal Oswal Financial Services. He's with us. Gautam, good to have you here. Let's just start with commodities and commodity plays here. What are your top ideas in that space? I mean, the assumption is that, even if the conflict ends, things will be tighter. In any case, I mean, demand was looking pretty strong before the conflict started. This conflict only added fuel to the fire. So maybe we don't go back to starting levels and remain higher. In that scenario, which are the best plays, commodity plays, to your mind?
Good afternoon, Prashant. Thanks for having me. So, in commodities, it's very simple. Last 2 years, we have seen a massive increase in cash flows for many of the commodity companies because of the underlying strong commodity prices, and which has helped them deleverage the balance sheet significantly. And now with this whole crisis, and as you mentioned, prices taking the next leg up, it augurs quite well in the near term from a earnings and cash flow perspective. So there is a trigger in the near term. We don't know how long it will last because you cannot extrapolate the current commodity prices where prices are jumping 2, 3, 5% every day. Because if you keep extrapolating it and mark to market the earnings, then there is no end to predictions of earnings. So the right way to look at some of these things would be to try and look at the net worth and price to book kind of evaluations and be a bit more balanced and judicious when you are looking at slightly longer term. I would think that from here, if the commodity prices stabilizes, while it will not impact the earnings much, but the price momentum may plateau a little bit. As far as we are concerned, we have Hindalco and Cell in our model portfolio in metals, and we have a slight overweight in that sector for last 1 year now.
Hi Gautam, always good speaking to you. But don't you think there's a bit of a risk to the next 2 years growth that we're talking about? The Nifty EPS growth, I think the 2-year CAGR will be around 17 to around 18%. Given the kind of spike we've seen in input cost, that could be at risk, isn't it?
If this sustains, of course, it will be. But, like we have seen 6 months back, prices were very different. And today the prices are very different. This is a rapidly changing scenario, right? If in the next couple of weeks you hear that the war is, getting over, prices can be very different in another 3 months' time. So we don't know, right? 2 years back when the pandemic began, we didn't imagine that between FY20 and FY22, the earnings will be up about 60%. But we are almost near the end of FY22 and earnings are up 60% from where we began in FY20. So strange things happen in market, Nigel. Secondly, as far as Nifty is concerned, if you look at the composition of Nifty, when the commodity prices go up, not all segments get impacted. Roughly 50% of the market or 50% of the Nifty corporate earnings are insulated, neutral. 10 or 15% of the profit pool in Nifty actually benefits from higher commodity prices. It's just 1/3 of the profit pool which gets impacted. So direct impact on Nifty earnings is quite limited. In fact, over the last 4 days, our team across 3 or 4 sectors have cut estimates in cement, auto, consumer, and have raised estimates in metals and slightly in oil and gas too. So net-net, we have not seen much change in the Nifty EPS estimates even as we speak. So we are still at 730 and 875 for FY22 and FY23. So how long this crisis prolongs, how long this commodity prices sustain, that will decide the course of the earnings. One has to be obviously watchful because things change very rapidly these days and cycles are shrinking very fast.
Okay, by the way, just want to highlight Escorts once again. Just put out the chart of Escorts, and if we can somehow get the futures trade, the discount has narrowed and how today. The March futures for Escorts are now up 7%. The spot is up 2%. But March futures are up 7%. There's still a discount which March futures for Escorts are now up 7%. The spot is up 2%, but March futures are up 7%. There's still a discount which prevails, of course. There's a 140 point discount which is there, but the open interest is reduced today, and that discount has narrowed a little bit. Gautam, autos have had a real, sort of rough patch, and a lot of reasons, both on demand side and supply side. But are you buying anything in this space, in this decline?
Actually, Anuj, I'm still not very positive on auto. We've seen 12 consecutive quarters of earnings downgrade. And the latest one, we've seen one more round yesterday, as far as our estimates are concerned. This is a sector actually which is encountering headwinds from all sides. Demand is weak, rural is slowing down, Two-wheeler, obviously, numbers tell you the story for last 2 years now. Supply is already constrained. Semiconductor chip availability is an issue. And input cost is hammering your margins. At the margin, you cannot pass on prices because the demand is weak. So I think it is going to take a lot of time before earnings stabilize there. This is the 5th year of downturn as far as auto cycle is concerned. The peak profits of auto, as I keep remembering, in FY18 was 30,000 crores as far as Nifty auto is concerned. And now we are at about 10,000 crores. So 5th year in the down cycle, earnings are 1/3 of the peak of FY18 and things are not looking very rosy. So we are continuing with our underweight stance on auto in our model portfolio.
Gautam, where else are you finding opportunities after the pullback?
Yeah, so I think, Prashant, it's very clear. The sector where we are most positive for last 2 years and continue to be very positive is IT. And incidentally, IT is one of the least impacted sector due to the current mayhem because of Russia-Ukraine or commodities or what have you. In fact, the demand visibility of IT remains extremely strong. And wherever there has been some pullback in prices, I think it is prudent to add those. We prefer large caps in IT because the ROEs, cash flows, payout ratios and free cash flow conversion is extremely strong and much superior to mid caps, and valuations are actually at a discount to the mid caps in IT sector. So that is a sector where we have about 300 basis points of overweight position since last 2 years, which we are continuing. The second sector, obviously, which is not doing well, but where the fundamentals look quite strong, is financials. But I think it's a tricky sector given the pace of FI selling that you're seeing and the over ownership that was there in that space. Nobody can predict where the prices in that sector will be in the short term. But we are finding a lot of value in that space, especially the large caps again.
Okay. Gautam, just stay on. We have more questions for you. But, one of the big stories, of course, UP is the biggest story. But one of the big stories is what's happened in Punjab. Here's Delhi CM and AAP convener Arvind Kejriwal.
हमने ये सिस्टम बदला है, हमने ईमानदार राजनीति की शुरुआत की है, हमने लोगों के काम की शुरुआत की है। अब बच्चों के स्कूल बनने लगे हैं, गरीबों के बच्चों को अच्छी शिक्षा मिलने लगी है। बाबा साहब अंबेडकर और भगत सिंह जी का सपना पूरा होने लगा है। लेकिन दोस्तों, ये इतना आसान नहीं है। ये लोग सारे मिलके बहुत बड़ी बड़ी ताकतें हैं, बहुत बड़ी बड़ी ताकतें हैं। हम लोग तो बहुत छोटे हैं इनके सामने। बहुत बड़ी बड़ी ताकतें, ये सारी ताकतें मिलके आज देश को आगे बढ़ने से रोकना चाहती हैं। आपने देखा होगा पंजाब में कितने बड़े बड़े षड्यंत्र किए गए, कितना रोज सुनते थे ये पार्टी वाले अपना वोट इसको यहां से ट्रांसफर कर देंगे, इसको यहां से ट्रांसफर। सारे इकट्ठे हो गए आम आदमी पार्टी के खिलाफ, सब इकट्ठे हो गए।
Okay, that's Arvind Kejriwal. I mean, that's been his politics, right? I mean, like it or hate it. And of course, the people have given Aam Aadmi Party a chance in Punjab because, it's worked in Delhi. And obviously, believe that, it can work in Punjab as well. And it's broken the sort of duopoly that we've had in Punjab for decades now. It was either Akali Dal or Congress. Akali Dal, Congress. It was just a bit of a ping pong. That's been broken by Aam Aadmi Party. But Gautam Duggad is still with us. Gautam, what else? In the mid-caps, what else looks interesting to you? Chemicals have corrected a bit once again. Would you buy here? If not, anything else?
Anuj, in mid-cap, I don't look at it sector-wise. It's very bottoms up. And I'm still very cautious on mid-cap because the relative valuation comfort is still not there. Of course, there can be some ideas depending on which sector you look at. We like Crompton Consumer in the consumer durable space. Some of the QSR names we like, Jubilant, Devyani. But the point is, mid-cap as a space, when you look at the NSE Midcap 100 index, or for that matter, even the small cap index, the valuation needs to narrow. The gap needs to increase between the mid-cap and large cap indices. Right now, that gap is not looking very conducive to me. And this has been the view, of course, in the last 2 months, that has shrunk a bit. Mid-caps were trading at a premium with some correction which has happened in the last 45, 60 days. That has come down, but it is still not enough in my view from a good compounding from a next 1 to 3 year perspective. So relatively, the bias in many sectors that we cover, we still have bias towards the large caps.
All right, final question, Gautam, before we let you go. What's happening with pharma? What's your view out there?
Yeah, so again, pharma is pretty much more a bottoms-up sector. Each stock has its own drivers. We have seen a very strong FY20 bar when earnings grew 50% after staying stagnant for 5 years. FY22 has been relatively more somber, and we expect FY23 also to be 14-15%. What we like in pharma is the healthcare space, especially Apollo hospitals. And within the traditional pharma names, our preference is towards Divi's and Gland, which incidentally are also part of our model portfolio. However, the headwinds of price erosion, the availability of key raw materials, the increase in freight and logistics costs, there are some of the headwinds which are still staring at the pharma margins in the near term. We saw some of the impact in third quarter, and I think that impact will accelerate and exaggerate in 4Q and 1Q. So our preference is slightly more towards the healthcare domain.
Okay, Gautam, it's always a pleasure. Thank you very much for joining us and running us through what you make of things. IT by far top of the list for Motilal Oswal. Gautam, of course, explaining that they've been bullish on that space for a while, and I mean, if only this kind of emboldens that call even more. We'll take a very quick break here. As always, we'll come back. We'll get you the dealing room check with Nimesh in terms of what is he hearing from dealing rooms, and we'll get you the buy today, sell tomorrow calls as well with our technical experts. Back in 2.